So today's video is built around one simple question. Is this Iran war a war to buy for the markets? And what are the specific impacts they will have on stock market, on gold, on the probability of a recession, and what the upcoming Fed chair will do, and finally, of course, its impact on Bitcoin. Now, this is particularly interesting because while the Iran war was looking like it was a brief resolution 2 days ago when Ayatollah was dead. However, as you see in the headlines right now, it's still going on. So the main question is how long will it last? And will it be a significant impact on the global oil markets? And because you can track the oil markets, you can then use that in the oil charts as a signal to track when this conflict will end and prepare yourself so you know exactly, should you get out of the markets or is it going to drag on quite a bit longer? So that's what I want to walk through today. I want to break this down in 7 parts. Number one, where are we with the Iran conflict right now? Number two, what does the history say about the stock market, the S&P 500 and the indices when the US goes to war with one of the Middle Eastern countries? Number three, what does the history tell us about gold and its performance in this period? Number four, why the length of this war is very important. And what happens if it ends very quickly, or what happens if it drags on? And exactly how long is a dragged on period? Number five, in both scenarios, if it's a quick resolution or a slow resolution, what does it mean for the global economy and for the recession? Number six, the oil price. What can we watch on the oil prices for a signal? And why does this directly show up on the oil prices? This is very particular to the case of Iran. And number seven, how all of this matters for Bitcoin, for the short-term price action and the long-term price action. And in the end, I'll give you a very simple framework for the signal on the oil prices you can track to see whether this war is ending and whether the risks have been resolved. Okay, let's get right into it. So, first of all, let me give you a brief conflict summary. Now, I just want to be clear here. I'm not an expert on Iran or expert on war, expert on any of this. Okay, we all use AI to research just like how we use Google to research before. So I'm not claiming to be that. However, I spent a lot of time working with AI over the last 2 days to come up with the stuff that makes sense in my head as the logic of the research tells me from the AI. So that's what I'm presenting here. I'm not claiming that this is my opinion. This is my, knowledge. It's AI's knowledge and it's my understanding of it. Just putting that up front. Okay, but the crypto parts I understand. So the latest updates on the Iran conflict. As of this morning, it's still going on. One of the best ways to track it of where there are still conflicts going on is on X with this page that I like to use called geoconfirmed. So whenever you see one of these, missiles landing in Dubai or in Israel, in Iran, whatever, I like to track this page where it confirms the video you see on X with a geolocation. This is pretty cool. It tracks the time as well, and it matches multiple sources to see if it's a real one or if it's some, a wrong location or wrong time. So as of this morning, it's still going on. Iran has not surrendered, and there hasn't been any real peace talks in place. So both sides are very, very tight. And even Trump himself has come out and stated this morning that they initially wanted it to be quick, but they thought it would be 4 to 5 weeks. And he says, we are a little ahead of schedule. Now, I'll come back to this, but the fact that he's even saying this is starting to buffer a bit already, because usually Trump is a like blitzkrieg executor. When he does something, he wants it to be finished within one day. Just look at what happened with Venezuela. So he is even unclear if this is going to take a few weeks, and a few weeks is already too long for a war at this scale. So Trump is already saying that he's open to talks with Iran as conflict deepens in the Middle East. But from what I've researched, again, I'm not on anyone's side. I don't know anything about this, but Iran has one of the largest concentrations in the Shia parts of Shia side of Islam, and apparently Ayatollah is also one of the main religious leaders in this part of the faith. Again, don't quote me on that. I could be getting this completely wrong, but that's why there are a lot of pushback, and it's not ending. And obviously, I, coming from this side of the world, I only have info from this side of the media. I really don't know what's going on at all. But it doesn't seem like it's a case where you take out the leader and the whole thing collapses. It doesn't seem like that right now, which is a big risk for the markets. So moving on, what will this impact the markets, specifically on stocks, on gold, and on the recession? So first, let's look at the stock market. So the stock market saw a brief panic over the weekend in futures, but it quickly rebounded. Now, people already know this, and they have expected this. I posted about this over the weekend on Saturday as well. This whole piece on Iran war, what it means for stocks, Bitcoin, gold, and the economy. Long story short, the stock market in the US usually bounces right after the war is priced in. So here is the performance of the US stock market right after the US enters the war. Here is 3 months before the start, 3 months after the start. And you see, from 3 months before to the 3 months after, it's actually a positive event, that war effect on the US stock market, on the S&P. And this is a bit sad and a bit grim, to say the least, but this is just the data. So if we look at the past 3 months of performance on the S&P, the next 3 months on average is going to be better. So it's just how it is. I'm not here to judge, right? So here are some specifics. If I can bring this up, zoom in. Here is the Iraq war and the S&P performance after that. Here is the Afghanistan war. Here is Desert Storm. I'm not exactly sure which one this was. And here is Pearl Harbor. So long story short, there's not much to say about the S&P. If you're holding US stock indices, you should be actually happy that we are in a war, just purely based on market returns. Okay. Now, how does this impact gold? Again, very similar performance. In fact, gold performance is very interesting, because as you guys know, gold is not always in a bull market compared to the S&P. Here is the nominal gold price versus each war that's in a similar region over the last 30 years. And here is the Iraq Revolution, Iran-Iraq War in 79. Here is their ceasefire, and here is 9/11 and the beginning of the Iraq War. And I don't have the exact chart here, but you can also point to the Gulf War, which was also a bullish year for gold. And even more recently, the Russia-Ukraine war was also bullish on gold. Now, obviously, we have a different backdrop, which is that gold is at a parabolic all-time high. So is gold overvalued a bit? Yes, compared to before. But the summary here is that if I were to put it into one word, Iran's conflict has put a bid back under gold and silver in the same fundamental sense. Because why did gold and silver and commodities rally so hard over the last year and a half? It's because of global uncertainty. It's because of dollar debasement, because of inflation, and because of actually just war going on around the other parts of the world. Okay, people fleeing to safety. And this is the biggest uncertainty event that we've had, I would say, since Russia-Ukraine started. And before that, since COVID. So it's a big event, and people will want to stockpile more safe haven assets. So that's why in my piece over the weekend, I have outlined here, gold is the clearest winner. If you're a gold bug, I wouldn't be bearish on gold right now. Although gold is very expensive right now, it doesn't mean it cannot be more irrational and rally on longer. Okay. So the market can stay irrational longer, can stay solvent. You don't want to bet against gold in global uncertainty. Now, the third point I wanted to bring up then is, well, we know that the S&P is bullish, gold is bullish from the uncertainty in Iran. Now, why is Bitcoin still so bad? Okay, just look at Bitcoin's performance. We didn't crash, but we're nothing like the S&P and gold. And the reason is very simple. The structural bid in Bitcoin is driven by liquidity. And ever since 10/10, ever since October 10th, there has been indiscriminate selling in Bitcoin, in crypto. And that's outside of all other macro. So this needs to change. And, we have outlined this over and over again on many different live streams. BTC bottom signals are firing. We can watch the business cycle, but the most important things to watch are highlighted in this video. And that is, when can Bitcoin be correlated with gold and the S&P again? And it really looks like we need full-on QE to the new round of QE to start printing more and more money after Kevin Warsh comes in as the new Fed chair in May. And we need potentially more rate cuts, a more dovish Fed. So before all this Iran stuff really went, 100x more uncertain, there was no black swan event for this year. Jerome Powell has left the Fed at a kind of, very slow, dovish period where the current round of QE is very slow. It's 20 to 25 billion per month. It's not enough to erase all of the balance sheet loss since 2022, and the liquidity gap is still huge. On top of that, Trump was not able to get his wishes fulfilled from the TGA, the Treasury General Account. He's not able to spend that money that he collected from tariffs. So he just got denied from the Supreme Court that basically says he cannot do more tariffs and he cannot, distribute this money. So I feel like it's all related, right? Trump needs a reason to fire another round of stimulus into the US economy from the TGA. And at the same time, Kevin Warsh, as a Fed pick, has been historically a very hawkish Fed governor. Because he supported the 2008 round of heavy QE, and he got a lot of flack for it, over the past 2 decades, he has been very hawkish. So he's on the camp of the Fed should not use QE and should be very careful with their policy until something breaks. Well, something is breaking. So this Iran conflict can be really the big catalyst here. If we don't have a fast resolution, the markets are going to really eat itself over the next 4 to 5 weeks. And it's not going to look pretty. So let's get into why that's the case. Okay, so as you guys know, the world runs on oil. And this is a very common thing, and it is true. So the Iran conflict is very significant because on a geopolitical scale, the Strait of Hormuz is what connects the Gulf region to the which ocean is this? This is the I don't know which one. I always get them wrong. But it connects to the rest of the world. It connects the oil tankers coming out of the Gulf countries, full of rich oil countries, to the rest of the world. And the Strait of Hormuz, one side is controlled by the UAEs, Oman, Kuwait, Bahrain, Saudi, this side of the world, and the other is Iran. And as of this recording, the Strait of Hormuz is closed by this Iran side. So here we have, Iran has, actually they have unblocked the Strait of Hormuz. Interesting. I gotta get this latest update from this morning because I've seen a mix of them. Let me actually do live research right now. Is the Strait of Hormuz closed? Yeah, see, Iran's Revolutionary Guards declare Strait of Hormuz closed. This is literally changing every day as we speak, depending on the news outlets that you follow. But as of 30 minutes ago, it's closed. So this is why we need to really track the oil prices. So this is all related. Okay. Why is this so important? We have covered the geo setup of the Strait of Hormuz. Now, all of the oil tankers coming out of the Gulf region accounts for about 20% of the world's oil and natural gas, liquefied natural gas supplies. And they flow through the Strait of Hormuz, mostly heavily to Asia, but also to the rest of the world as well. And whenever this comes into question, that disrupts everything. And especially that's a big impact on the global economy because oil is one of the biggest upstream factors that determines production, and that determines economy, and determines your everyday gas prices. And it has a very direct correlation to economy and the recession risk. So let me bring up what the AI summary is again here. I'm not claiming to be an expert of oil impact on everyday spending, but here is the economy and recession risk as related to oil. So when there is war in the Middle Eastern region, oil prices spike, leads to higher prices, leads to consumers spending slowing, and leads to slower growth rate. And then you have unemployment rising, you have business cycle slowing, etc., etc. So historically, whenever you have oil shipments disruption, if it's a short disruption, it's okay. If it's prolonged, especially in the case of war, it's a big problem. Exactly how long? Okay, so as we outlined earlier, Trump has come out and said that, hey, we could be expecting 4 to 5 weeks of war. Is this too long? So I asked Claude, Opus 4.6, the super intelligent AI that can definitely summarize this better than I can. And here's the response. The answer is a short war should be under 2 weeks. This is closer to the 1986 Operation El Dorado Canyon when the US bombed Libya, and it was over in days. And then in January 2020, the Soleimani strike, which was from escalation to de-escalation in around 10 days. And markets can price in the fast oil spike, but then the oil prices mean reverts. The supply lines get restored and things are okay. This needs to happen under 2 weeks. Then you have this similar playbook of you buy now, going into the war in the first 2 weeks, and then oil prices spike, but then they come back down. Within 2 weeks, everything's fine. But if you have 4 weeks plus where the Strait of Hormuz is disrupted, it doesn't even have to be completely closed. But if we just have, these uncertainty here, like yesterday they have unblocked it, today they blocked it again, and then shipments of oil tankers drop anchor in the Gulf, and tankers are damaged, then the uncertainty on the oil supply is high, and that's more than enough to spike oil prices and have it remain high. And it doesn't even need to carry out to the actual supply lines of the oil. It just needs to spike global oil prices, and that's more than bad news enough. So Claude Opus 4.6 says 4 to 5 weeks of disruption in the Strait of Hormuz absolutely counts as prolonged in this context. For comparison, the 1973 Arab oil embargo lasted around 5 months and caused a full recession. The 1979 Iran crisis disrupted oil for over a year. Those are historical analogs if Hormuz stays shut. The problem here is if the Strait of Hormuz opens within 4 weeks and the tankers can already go through, that's okay. But if the war ends, but the Strait of Hormuz is still closed, or the tankers cannot pass through very safely and they're still anchored, that's bad. So the point here is we not only need to watch this conflict. Okay, let's say the conflict escalates or de-escalates, you see missiles or you see bombings, or you see, the key military leaders or whoever's in charge, they get taken out, and then you don't see as much fighting. But if the oil supply lines are still disrupted, that's the most consequential impact on the markets. The war part is one side, but the oil supply parts is much more significant. Okay, so let me see what. So the AI says the simplest way to frame it is that if we are still talking about the Strait of Hormuz being shut down in 2 to 3 weeks, this is no longer just a headline. It's a real economic event. So that's the real risk here. We not only need to see the war end very soon, but we also need to see the Strait of Hormuz opening up and for the oil supply lines to be restored. Let's say maximum within 4 weeks. That's the timeline. And the way you can track this is very simple as well. You can directly look at the crude oil prices. So when you look at these headlines, oil and gas prices jump. This usually tracks the per barrel price for oil. And the main way you want to track this is with Brent. So you want to look up Brent as the ticker, and any of these will work. Brent crude oil, this is the type of This is the main price index you want to track. And here I have it right now at 78. So oil is the main signal, because if the Strait of Hormuz doesn't open, we're not going to see it directly in all the headlines. Obviously, our headline news is going to be biased, but oil prices trade globally. So if oil prices remain high, that's the quickest signal you'll see. You don't even need to read the news. Resistance that we want to watch is around 95. So if we get a ceasefire right away, and if we get the Strait of Hormuz being open, let's say next week, then chances are this high, right around 79 to 80-ish, right here, we should just get something like this. That would be the best, and for oil prices to come back down. But if we get it continue trending higher slowly, we don't want it to get above 90, or worst case scenario 95, because that would be a 2-year high, and that would be pretty bad. Okay, and going back to my notes here. So that's the main signal. We have a time signal, which is Trump says this conflict, he's expecting it to be over within 4 to 5 weeks, which is already way stretching it. If it lasts longer than 4 weeks, typically that's a very long conflict at this scale, causing disruption to oil supply lines. And on the oil charts, if it lasts a full 4 weeks, we don't want oil prices to get above 95 on the TA. And those are the two signals to watch. And that will be the main upstream that will go down and affect everything. So first, it will affect the economy and chances of recession. And then it will affect not as much S&P, because S&P will rally, gold will rally, but it will definitely affect risk-on assets like Bitcoin. And it will affect just general investor confidence, which could lead to a short-term crash in investor confidence and lead to some sort of a black swan event and cause us to have bigger short-term pain leading into the rest of the year before markets can recover. So if we have a very short resolution, then probably nothing is going to change on Bitcoin. But if this conflict drags on, S&P and gold probably will do okay, because in all previous war times, these two did quite well. But for risk-on assets like Bitcoin, it heavily hinges on investor confidence. And if we have a drag on disruption in oil, that impacts unemployment rate, that impacts the all of the economic indicators, which has much bigger impact on risk-on asset like Bitcoin. So if it drags on, then chances are we're going to see lower prices on Bitcoin. And this bounce right here, if you are already long on Bitcoin and if you are holding Bitcoin like I am, the best case scenario is a smooth resolution. Even though people will say, hey, we can have a black swan event, and then we'll have heavier rate cuts, heavier QE, which is going to boost assets. But then that will be because we have a short-term black swan event. And so let me put it this way. If the conflict doesn't end within 4 to 5 weeks, and if oil prices spike above 90 to 95, then it's not going to look pretty for Bitcoin. Most likely, we should get a revisit towards the 200-week SMA at 58,000, and probably going to go below that. Exactly how much lower, I don't know. If you look at the 2022 bear market, the first time that Bitcoin dropped below the 200-week SMA, it went as low as 20% lower after the FTX crash. Now, if you consider, something like the FTX collapse as a black swan event, and say this Iran crisis drags on way longer as a similar scale black swan event, then maybe we have 25% lower than the 200-week SMA, which will look something like 42K. 43, 42K. That's going to be pretty bad. Again, I don't know if this will happen. I am not counting on it. I'm not a Bitcoin bear. Every single time I give these scenarios, I want to make it perfectly clear. In the last 3 bear markets, 2 of them did not go that low. 2 of them pretty much bottomed out right at the 200-week SMA in 2015 and then in 2018. And even during COVID in 2020, it bottomed at the 200-week SMA. Only in 2022, it dragged on quite a bit longer and got 25% below the 200-week SMA. So I'm not sure if we will have low 40Ks on Bitcoin. It's definitely possible, but I'm not, putting all my bets there. I'm already starting to buy, like I have said in every single video, and I'll continue to buy in DCA and just aim for an average entry at the 200-week SMA at 58K. That would be plenty good for my portfolio. Watch what Trump does and watch the de-escalation. We don't want the conflict to last longer than 4 weeks. And we want the oil prices to stay below 95. If the conflict ends within 2 weeks, we don't want the oil prices to even spike above 80. If it goes as long as 4 weeks, we want it to stay below 95. If it spikes above 95, that will be very bad because that will trickle down into everything. And especially risk-on assets like Bitcoin will take a big hit because there will be a high chance of some sort of a economic emergency, and all of the economic indicators will look really bad, which could trigger a fast rise in unemployment, consumer spending being really bad, and all of the economic prints being very bad, and that could lead to a confirmed recession, which really could cause a short-term crash on Bitcoin if the war gets dragged on. So really pay attention over the next 4 weeks. We want a fast resolution and we don't want oil prices to spike. That's it. That's the framework I have for today to protect myself in order to not fall for this potential crash event over the next 1 month. Keep that in the back of your head so you know exactly what's going on, and don't get swing out of your position as you see these weird news that's coming out that's very biased, commenting on both sides of the war over the next month. All right, that's it. Thank you guys for joining the live stream. Follow me on X if you want day-to-day alpha. Before I make them into these in-depth videos, I'll make sure to put out faster commentary on the latest developments on oil and on the conflict. And share this video with a friend and subscribe to the channel if you want to follow our future live streams as we follow this development in real time. That's it. Thank you for joining the live stream, and I will see you in the next one and the next video. Bye-bye.